Hey everyone, Richard here, and in this video I'm going to answer the question whether you should buy your own home to live in or whether you should rent. So if you're somebody who's watching this video who's currently in a situation where you're looking to start to build a multi-million pound property portfolio and you're not sure whether you should own your own home to live in or whether you should rent, then hopefully this video is going to help answer that question for you. And the reason why I chose to create a video on this topic specifically is because I've been speaking to multiple clients of mine, and I also have in the year, I do over 1,000 sales consultations with people who look to enroll into our flagship training program, Property Investors Accelerator, where we help people start and grow successful property businesses. And I'm constantly faced with this question. And I know it's a question that a lot of people have when they start out. And specifically, it was also the same for me too. When I was starting out, I was also faced with the same dilemma and the same question. So in this video, I'm going to share with you my personal story, like what I learned through the process to help substantiate my answer to this question and to give you clarity on why I believe whether it's good to own your own home first or whether it's good to rent. By sharing my personal story, it'll give clarity on my answer to that question and why. I'll take you through some property financials of the very first property that I bought and how that kind of panned out for me and the lessons I learned through the process. I'll take you through where I live now based on my current situation and what I choose to do. And then I'll take you through some calculations as well. And the reason why I want to take you through some calculations, is because I'm a bit of a geek when it comes to investing in properties, right? Everything I do is based on financial data. And so whenever I've got a question, my first thought is to go to the numbers. Let's financial model this out and then see what the numbers say. And that helps intrinsically to make, for me personally, I feel that it helps me to make better decisions about which way to go when growing my property portfolio. And these are the things that have helped me to scale my property portfolio to multi-millions of pounds in an exponential period of time, and by being safe in the process. And then after that, I'm going to give you a summary. So we'll answer the question specifically, we'll summarize the key points, and hopefully this will provide you with a lot of clarity and help you to make the decision that's right for you based on your personal individual circumstances. So let's jump in then. So here's a little bit of an insight into my personal story. So when I was faced with this question, the first thing I actually did is that I did actually buy my own home to live in. I bought my first property when I was just 23 years old, and I did it using the government Help to Buy scheme. I bought a property in Oxford, and that's where I live, and I currently live today. I bought a property in Oxford using the government Help to Buy scheme. And the reason why I did that is because I was always taught when I was growing up by my parents, and I think society kind of programmed this into me too, that you should basically buy your own home because it's a good way to save money. And I was always taught that it's a safe place to put money because over the next 25 to 30 years, when I'd go to retire, my house would be paid for and I'd have cash equity built up in the property, and that would be a great way to, one, save money, and two, I was always told that renting is expensive and the landlord makes all of the money, right? Which is true in a way, that is true, but as we go through the video, it's kind of only half the story. It's a very generalist statement, and actually, in my opinion, it actually distorts your decision-making process when you hear things like this, because there's no numerical reference to it, and generalized comments like this can really prevent you from scaling and growing. And this is what it did for me in the first instance as well. And that's one of the reasons why this philosophy was programmed into me. And this is the main reason why I basically ended up buying my own home when I was 23 years old. So here's the property financials. The property was worth £235,000. I put down a 5% deposit contribution, which was £11,750, and then I borrowed £47,000 from the government, and they basically put in a 20% contribution. So when you basically buy a property using the Help to Buy scheme, you can buy a property up to £600,000. The government will contribute 20% against the value of the property, and you have to put down a minimum of a 5% deposit. So that's what I did. And then the mortgage on this specific property was £176,250, and I took the mortgage out over 30 years at around about a 2% interest rate at the time. And based on this mortgage of £176,250, my monthly payments were around £650 per month, which effectively worked out to be £7,800 a year, plus property taxes and bills, right? So I had to pay council tax and then all of my utility bills, right, on top. Now, I lived in the property for the first few months, and then I realized I wasn't able to save much. So I decided to rent one of the rooms out. So I was living in the property, I was going to work every day, and I realized that actually, based on the income I was earning at that point in time, which was around about £2,500 a month, by the time that I had kind of paid my monthly mortgage, paid my council tax, paid all my utility bills and all my household living expenses and all my fuel and stuff, at the end of the month I was kind of like at break-even point, or I just have maybe £200 to £300 a month that I could save. And I appreciate that some people can't save and that they'll be watching this video thinking, well, 200 to £300 a month isn't bad. And you might well be right. But the truth of the matter is that £200 to £300 of savings a month wasn't going to enable me to scale my multi-million-pound property portfolio and achieve the goals and aspirations that I'd set for myself. So when I realized this, I knew that there was something called basically a rent a room scheme that the government had put out, and it basically meant that you could basically rent one of your rooms out in your property under a lodger's agreement. And I had a 2-bedroom property at the time, so I rented one of the rooms out, and I got my tenant to sign a license to occupy, and that's the legal documentation that you need to use if you're in this scenario and you're thinking of renting one of the rooms out in your property that you're living in. And it basically meant that I could earn £7,500 a year tax-free under this rent-a-room scheme. So that's what I did. And it just so happens at the time that the market rent for renting a room in Oxford at the time was around £600 to £650 a month. So £7,500 a year worked out to an allowance of £625 per month. So I just basically said to my tenant that they could pay me £625 per month, which was the £7,500 a year, and I could have that income tax-free. And that kind of offset my mortgage, but it was still not quite enough to offset the whole mortgage. And this is basically, I think, the first time that I really realized that owning my own home wasn't actually an asset. I always thought that owning my own home was an asset because I had equity in it and that the house price was going to go up over time. But it wasn't until I learned that actually the definition of an asset is something that makes you money every month, and the definition of a liability is something that costs you money every month, so it's an expenditure. And I realized at this point that actually the home that I lived in wasn't making me any money. Right? It wasn't making me any money. It wasn't giving me income. In fact, it was actually taking money out of my pocket every month, and it was my largest monthly expenditure. And at the time, and still now, Grant Cardone, I don't know if any of you watching this video know who Grant Cardone is, but if you don't, he's been a very successful real estate investor. He's based over in the US, and he's got over £8 billion worth of real estate, right? So he definitely knows what he's talking about. And so I've been following his advice for a number of years. And actually just recently, I took out a 3-year contract with Grant for him to help my sales guys under Cardone University. And I paid him £71,000 under a 3-year contract for his best sales team to help build my sales team within my consulting business. So I'm always investing in myself as well. So, but what I learned from studying the work of Grant Cardone is that he basically said, don't buy a house to live in. He said, rent where you live and own what you can rent to others. And that made complete sense to me, because it was like, if I live in a property, then I'm paying money down every month. It's not making me any money. I'm going to work and paying, say, anywhere between 20% to 40% tax on the income. And then I'm using that taxed income to service the debt on my property and pay it down, but it's not making me any money. And in that scenario, I'm giving quite a lot of it away before I even pay down the debt. And then I realized, well, if I could rent the property out and it would make me income, then I could start to hit my goals faster. So that made complete sense to me. And I started to build a property portfolio. And within 18 months, I ended up adding 15 properties to my portfolio. And this provided me with a gross rental income of £13,500 a month. And the cash equity in the portfolio now, just on those 15 properties, is just under £1 million. Now, today, I've done everything from single lets, expanding my portfolio through to multiple HMOs, and I've done commercial to residential conversions, and I've converted office buildings to 11 apartments and things like that. And my property business makes between 60k and 100k a month. And some days I've made as much as 22k in a day, and I still rent where I live now. And the reason for this is because, and the reason I'm telling you this is not to glow or to show off about how good I am or not. That's not what that was for. I'm a very humble person, and in fact, like if we compare me to Grant Cardone, who owns who owns £8 billion of real estate and makes over £200 million a year, me making 60 to 100k a month is very small in the grand schemes of things when I look at the giants who are above me and who I aspire to be one day. So the reason I'm telling you this is because for a lot of people, this will seem like a good income, and it is a good income. And they'll be thinking, well, why then don't you own your own home? Obviously, like, you should buy a nice place to live in, buy a dream house. And you know, that could be right for some people. But for me personally, I want to expand my business, and I want to grow a multi-million-pound property portfolio, and I really want to have choices and freedom in my life. And I'm basically making all of my decisions on long-term thinking and not short-term instant gratification. Now, the main reason why I live where I now, the main reason why I rent where I live now will become very clear in a minute when I do some calculations with you. But from like a really high level, like, here's my current position. So I live in a house in Oxford. It's worth around 1 million to 1.25 million. And I've got an acre of land, okay? And the property costs me with bills and rent around about £3,000 a month, which is £36,000 a year. And I've put here that it's expensive to rent, but it's more expensive to buy this property and to live in it that way. And I'm going to run now some calculations with you. So I'm just going to hop over onto another screen, and we're going to go through some calculations together. And I'm going to really substantiate why I choose to rent over buy a property that I live in. So let's jump into the calculations. So let's take a look at that. If I was to buy this as my own home to live in. So I bought the property. So I have the property here, okay? This is the property that I'm living in, okay? And this property is valued at £1 million, okay? So the property is valued at £1 million. So £1 million goes in here, okay? Now, in order to buy this property, we have to put down roughly a £200,000 deposit, because on a property like this, to get a residential mortgage, we're probably around the 80 to 85% loan to value mark. So I'm going to say we're around the 80% loan to value mark for the purpose of this calculation. And I'm going to say that the mortgage that we take out therefore is £800,000. So in order to buy this property, we need to put down a £200,000 deposit. Okay, so this is our deposit. And on top of that, of course, we have to pay things like stamp duty, and we have purchase costs like our legal fees and stuff, and maybe a broker fee and valuation as well. And I'm going to say that on this property, well, the stamp duty on this property would be £43,750 in stamp duty to buy this property, okay? And on top of that, we have our legal fees to pay, right? Now, to buy this property, the legal fees would roughly be around £2,000 to buy the property, okay? So if we take the £200,000 deposit plus the £43,750 in stamp duty plus the £2,000 in legals, we end up with a total investment to buy this property of £245,750, okay? Right? Now, it's a significant investment in the first place to buy this property, and we're tying up £245,000 of our hard-earned money, and it's not making us any money in this scenario. You're going to see it's actually costing us money every month. So let's take a look at that then. So what are the monthly costs on this property? Okay, and I'm going to put number one here. Number one basically means example one, where we're buying the property to live in. Okay, so we have our monthly costs, right? So I'm going to put monthly costs here, right? And on our monthly costs, we have our mortgage. Now, an £800,000 capital repayment mortgage at around about 2% will give us a repayment figure of £2,976 a month, okay? And if we times that by 12, okay, so we take the 2,976 and we multiply that by 12, we get a figure of, let's just do that here, 2,976 multiplied by 12, we get a figure of, an annual figure of £35,712 a year of mortgage repayments every year that we have to pay. Okay, now on top of this property, in order to live in this property, we've also got our monthly costs in terms of utilities and council tax as well. I'm going to put CT for council tax, and roughly the council tax on a property like this in Oxford for £1 million would roughly be around £250 a month. Okay, and if we take the £250 a month and we multiply that by 12 to get an annual figure, that will give us an annual bill of about £3,000 a year on council tax. And then, of course, we've got all of our utility bills as well. I'm going to put UT for utility bills. That's a gas, water, and electric that we have to pay every month, right? This isn't withstanding Wi-Fi costs and TV license and stuff. I'm going to leave those out for the purpose of this conversation and for the purpose of this video, okay? So utility bills are roughly, again, around £250 a month on a property of this size. It's a four double bedrooms. And in my personal situation, I've got 3 children and my partner that live in the property. So there's 5 of us, okay, family of 5. So 250 times 12 gives us £3,000 of utility expenditure as well. So if we take the £35,712 and we add on the £6,000 of annual costs for our council tax and our utility bills, we end up with a total expenditure of £41,712 per year to live in this £1 million property, to buy it, have it as our own home, have it on a residential mortgage, live in the property, is going to cost us £41,712 a year. Now that we know what the monthly costs are and how much it's going to cost to buy the property, the next thing that we need to really look at is salary, right? And the reason I'm going to put salary here is because when we're buying a property to live in, of course, we have to take into account our financial habits and what the cost of that is as well. So typically in this situation, we're going to say that I was a corporate employee, and this was my situation back then. I was a corporate employee, and in order to buy a property of £1 million, myself or this person that we're speaking about in this example would have to be earning around £200,000 a year of salary. Okay, so they're a higher rate taxpayer, and they're at the additional taxpayers rate of actually 45%. Okay, now if you earn £200,000 a year, you would effectively be earning £16,667 a month. So you take 200,000, divide that by 12, and you end up with a monthly figure of £16,667 a month of gross income. Now, as an employee, you're going to get taxed, and you're going to get taxed on national insurance contributions as well. So the actual net take home a month is £11,862 a month. And you're going to be taxed in national insurance contributions and taxes. You're going to actually be taxed, if you take the 16,667 and you minus 11,862, you're going to be taxed £4,805 a month. Okay, so, and if you want to know how I got to that £11,862 a month, by the way, from 16,667, I've got an app on my phone, and it's a salary calculator, so it does all the accounting stuff for me, and it tells me what the actual figures are. So that's how I came to 11,862, and that's how I know that the tax bill was 4,800 and, let me just double check that I can't read my writing here, 1667 minus 11,862, 1667 minus 11,862, yeah, 4,800, that should be an 8, £4,805 in taxes. Okay, so in this example, we're having to pay £4,805 in taxes before we start to pay our monthly costs of effectively just shy of £3,500 a month, okay, which effectively is coming out as £41,712 a year. Okay, now what we can do is if we rent this property, so that's scenario 1. If we were to live in it, that's what the numbers look like, right? Now scenario 2 is we actually choose to rent this property and actually do what I do. Now, in order to rent this property, remember it costs me actually £3,000 a month to rent this property, all in, if you remember from the previous Google doc that I was working through before we hopped into this video. 3,000 a month, and to break that down, I'm paying £2,500 of market rent, so that's my rent, and then I'm paying the £250 a month in council tax, and then I'm also paying the £250 in utility bills a month. Okay, utilities here, which gives me the total of 3,000 monthly expenditure, and the actual monthly expenditure up here, we should do that actually, is 2,976 plus 500. Okay, your 250 in council tax, 250 in utilities. Your total monthly expenditure up here is 3,476 a month. So actually, to rent this property, it's actually working out cheaper in this scenario. Okay. Now, in most scenarios, if you're not in this situation, you're thinking, okay, I understand this, and Rich, that's your situation, but I'm way off owning a property or renting a property for £1 million. That's also okay. You can apply this exact working example and these calculations and formulas I'm using. You can watch the video and apply it to your personal situation. In either scenario, I think whatever situation you're in, your rent is going to be roughly around the same as your mortgage payments, or potentially at the higher values, it may work out less. Okay. Now, if it does work out to be more, and there's a scenario like that, that's also okay too. Just run the calculation, and it will help you work out where you are based on your individual circumstances. But in this scenario, for this example, and my specific individual circumstances, it works out that paying the rent and the bills is actually less than paying the mortgage and the bills in this scenario. So this scenario is actually costing me £36,000 a year. Okay, so in this scenario, I happen to be paying a year, so what am I paying less? We take the 41,712 from here. What's it costing me a year to live in it? And then we minus off the 36,000. So 41,712 minus off the 36,000, and we're left with a figure of £5,712. So that's what. So if we rent, it's saving us. We get a saving here. Okay, so this is a saving of £5,712 a year. Of course, though, we're paying rent. We're not owning any property. We're not paying down the mortgage. We're not building up any cash equity, and we're not benefiting from capital growth. I get that. However, look at this. If we run this scenario and we carry it on, and we say, for the purpose of this situation, I'm going to say that, and to make things easy for you to understand and to make my point here, which will help you to make your decision, if we take that 245,750 and we bring that down here, so 245,750 is what we had in cash to buy the property in example 1. We could actually invest this cash, and if we invest this cash and buy properties with it, so we choose to rent the place where we live and then buy properties, use the cash that we would put into the property, we save that cash and buy rental properties instead. Here's our scenario. Now, ultimately, if you were in this scenario, you would effectively take this £245,000, you would set up what we call an SPV, which is a special purchase vehicle, which is effectively a limited company to buy the properties in. And therefore, this cash here would go into the limited company as a director's loan account, because this cash is basically savings, and your savings is come from taxed money. So it goes into the SPV, the limited company, as a director's loan account. Okay, so that 245,750 goes in here as a director's loan account, and that creates an excellent tax planning opportunity as well. Now, I'm not going to talk about tax in this video, so if you're new to the taxes, you don't understand what a director's loan account is, what an SPV is, and you're not totally au fait with property taxes just yet, don't worry. I have other videos on my channel, and if you go into the property tax section under my playlist, you'll be able to go to the videos all about director's loans accounts, SPVs, and property taxes, and basically those videos go into the granular detail in that area of my channel. So you can hop over there after this video or when suits you best, and you can learn more about this. But for this video, I don't want to go into taxes. I just want to help you define what's the best scenario. Should I own the property that I live in, or should I rent it? Now, in this scenario, we're renting. So we rent the property. We put the £245,750 into the company as into the company's director's loan account. Now, to make this really easy, I'm going to say that you therefore topped up in this scenario another 5k. So you actually brought this value up to 250,000, just so it makes the maths easy in this example to kind of explain this to you. Because effectively, if you take the 250,000 and you put it into the limited company's director's loan account, you can go and buy 5 properties, right? And let's say that we buy 5 properties that are rental properties, and we buy those properties in the SPV, okay, for tax reasons. And all of these properties, let's say that we buy 5 properties and they're all worth £200,000, and we put down a £50,000 deposit, which gives us £150,000 of mortgage, which is effectively a 75% loan to value. So whenever you invest in a buy-to-let property, you roughly take out a 75% loan to value mortgage. So we put £50,000 down here. Now let's say that this property gives us rental income of £1,100, and then the mortgage on interest only is £150,000, and let's say that we're going to buy it in a limited company and the interest rate is around 3%. So times 3% divided by 12 gives us a mortgage payment of £375 per month, okay? And that therefore, I'm running out of space here, but that therefore, hopefully you can see this. Sorry about it being a little wonky. I'm going to run out of space before I go on to the next page. That is 1,100 rent minus the mortgage is 375 a month, gives us a gross rental profit of £725 a year. Now again, for the purpose of this example and just to show you the numbers from a high level, I'm not going to allow for things like purchase costs. I'm not going to allow for things like your monthly operating expenses and your management fees and all of those things. I'm just going to run it from a high level so you can basically see the analogy here in the example and help answer our original question. So £725, and we times that by 12, we end up making a gross rental income on each property of £8,700. Sorry, I shouldn't have said gross rental income. I mean a gross rental profit, so an income, your net income of £8,700 a year on each property, okay, if you were to rent these properties out. So if we take the 8,700, and remember we brought 5 of these, so we're going to times it by 5. Okay, that makes us an income of £43,500 a year. And this money, this income, is tax free. Okay, because we can draw this income out against our director's loan account in this example if we are to invest the money in this way, which is what I did and what I would recommend you do if you're in a similar situation. Okay, and again, not going into taxes, go over to the property tax section and you'll learn all about this and why this money is tax free. But this £43,500 pays for the rent, because the rent's 36,000, remember. So we take the 43,500, we pay off the rent of 36,000, the rent plus our bills to rent. So to basically rent this property is costing us 36,000 a year. We take the 43,500 minus the 36, and we're left with a profit of £7,500. So we're making £7,500 a year of profit if we use the money from our properties, so our assets, to pay back our liabilities, which is our living costs. So our tenants, our property portfolio in this scenario is effectively paying for us to live in the same property. So we live in the same property. In one scenario, we bought it and we owned it, and it was costing us £41,000 a year. And out of our £200,000 income, we are having to pay £4,800 a month in taxes to then pay for the debt, to pay for the mortgage and the living expenses by living in the property. It's not making us any money. We can't buy any other properties. We're stuck in our corporate job on this hamster wheel. Okay, and in scenario 2, we're choosing to rent it. We don't have to put down £250,000 of deposit and purchase costs. We put the £250,000 into the company. We rent for £36,000 a year. We live in exactly the same property, and we have an additional 5 properties that are all going up in value, remember? okay? They're all going up in value and they're making us £43,500 a year extra money to pay for our rent of £36,000 a year. Because remember, in this scenario, we still have a salary, we still have our 200k salary, okay? Because in both scenarios, we're saying we still earn 200k salary, we either own the property or we rent it. So if we're faced in this situation, we've got a 200k salary with 5 properties and we rent it and we live in the same situation, and we get an extra £43,500 of income, which is tax-free, or we buy the property, we live in it, we say we own a home, we have a 200k salary, and that salary is all of that, part of that salary, after taxes is used to service the property that we live in, and we don't own any other properties. So in my scenario, looking at this situation, should I own or should I rent? In my personal opinion, it's always better to rent if you want to scale a property portfolio, because you can do it faster and the numbers tell me so. There's no opinions on this. There's no hypothetical examples. This is the numbers driven exercise, and the numbers tell me if my goal is to be financially independent as quickly as I can and to scale a property portfolio, this situation by renting and then investing my money to buy rental properties allows me to achieve financial independence much quicker. And if we start to compound this math and compound it over a number of years from that decision-making process, you will see that scenario 2, where we rent the properties, gives you exponential growth. So we're going to hop back over into the Google Doc. I'm going to finish with a summary and conclusion, and then hopefully that will help answer your question about whether you should own the property that you live in or whether you should rent. I'll see you back in the Google Doc. Okay, so let's go through the summary then. So here's my summary. So don't buy a house to live in. Rent where you live and own properties that you can rent. I'm not saying under any circumstances don't buy a house. But I am saying that if you're trying to progress financially, then owning properties that you can rent out and renting where you live will allow you to progress faster, and it will allow you to scale, as we saw from the calculations in my example. Now, I learned that if I own a property that I live in and therefore I cannot rent it out, I have to pay for it. And that is what I don't want to do. The cash equity is tied up and I cannot use it to grow. And I think fundamentally, if I'm being completely honest, this is what keeps most people on that perpetual cycle of feeling like they're on the hamster wheel and on the treadmill, where they don't feel like they're financially independent and they feel that they have to go to work every day doing something that doesn't fulfill them, because of the way they're using their money and the decisions that they're making in their lives. Now, the other thing I would say in the summary here is that if you love property like I do, I realized I can buy multiple properties using leverage and build a property portfolio faster than I can if I buy my own home and live in it for 25 to 30 years, paying the mortgage down to zero. So effectively, if I rent properties, then I can build my property portfolio much faster than if I just own one property that I pay down to zero over 30 years. And basically, the summary is, and the conclusion that I made is that basically I own what pays me income. I only own properties that pay me income. And the properties, the reason why I rent my property as well, one of the big reasons why I rent my property and build my property portfolio in the way that I do using leverage, is because it provides me with the freedom and flexibility to travel and move around. And this is congruent with my number one reason to build a property portfolio in the first place. Like, one of my reasons for building a property portfolio and my desires and aspirations was so that I could spend time with my kids, so that I could have the time to do the things with the people that I love and do the things I want to do when I want to do them. And ultimately, we like to travel as well. So having a property portfolio and renting a property doesn't tie me down, and it allows me to travel around the world and continue to build my property portfolio and scale out. And that was the main reason why I bought it in the first place. And if you own a property that has cash tied up, I would either refinance it to release equity, or I would sell it to release all the cash to invest into rental properties that provide me with cash flow every month and provide me with a tax break. And again, not talking about taxes on this in this specific video, but again, just to reiterate, if you go over to my channel, you go over to the playlist and you go to the property tax section, there's a number of videos about property refinancing, tax breaks, directors' loans accounts, and all of those sorts of things that will help you to understand that in the granular detail. Now, for me, this just really summarizes it. So Grant Cardone still, even to this very day, rents luxurious places for his family to live. And I think at the moment he's currently renting a property that's like, he pays $40,000 a month for, even though he has a portfolio of property that is worth around £8 billion. And for me, that really just sums it up. In my personal opinion, like Grant Cardone is one of the most financially literate people on the planet. I continue to follow his work today, and he continues to be of significant influence in my life. And if a guy that owns £8 billion of property is renting properties and not buying them, and he's still continuing to invest, then for me that shows really the financial behavior and the financial habits of the wealthy. And therefore, if I want to get wealthy and I want to be wealthy, then I need to start acting and behaving like the wealthy do. And therefore, for me, this really just summarizes it up, that basically, if you're left with the decision of owning a property to living or renting it, or renting, not renting it, renting, I personally would choose to rent and invest the cash to build cash flow at leverage, to build a portfolio. So I hope you found this video useful. If you did, please hit the like button. It would really help me to get more people viewing our channel and watching our videos, and I'd be hugely grateful to you if you could hit the like button for that reason, and I'd really appreciate it. And also, if you haven't subscribed to my channel already, hit the subscribe button. And if you want to get weekly notifications, we produce new content every week. So if you want to get notifications when our new content comes out, then you can click the bell icon and you'll be notified. So yeah, thanks so much for watching this video. And also one last thing as well. Guys, leave me some comments in the comment section below. Like, ask any questions you want. If there's anything that doesn't make sense in this video, like, just ask the question in the comment section. Someone from my team or even myself will go in and answer the questions. And let me know what you guys are doing. Are you renting or are you owning your own property? Why did you decide to do that? What helped drive your decision-making process? I want to know. I'd love to hear what you're doing and get some feedback. So yeah, thanks so much for watching this video, and I'll see you in the next one.